The bad news with SoFi stock just doesn't seem to stop. The stock is down again over a 5-day span, all the way down to $6.46, and just over the past 2 days, the stock's down 12%. This is leading a lot of SoFi investors to get very impatient. Many shareholders have been in this stock for multiple years. A lot of people are underwater on their shares, meaning they have a loss on their shares, and they've been averaging down and averaging down and averaging down. There's only so long that a stock can stay down before investors start to lose confidence in the management team, and it seems like that's starting to happen a little bit with SoFi. Seeming like even retail sentiment is changing for the worse with SoFi stock. We've got to get out of the woods ASAP for investor confidence to come back into SoFi. We thought profits would bring massive upside to the share price, and that didn't even work. If a company flipping from net loss to net profit doesn't make a share price soar, then there's got to be something else holding that share price down in the short term. So in this video, we're going to talk about a major shareholder of SoFi completely selling out of their entire position, whether or not this changes my sentiment around SoFi stock, and then what needs to happen for us to get some positive momentum in the shares again. I'm excited to get into all that, but first, if you're new here, I'm Austin. I'm a co-owner of cloudmusicsuite.com. I'm also a stock market investor. Most importantly for this video, I am a SoFi shareholder. It is a very large position for me. I have kept on buying the stock in these lower ranges to the point where it's one of my largest holdings in my entire portfolio. As a result of it being such a massive weight in my portfolio, I have slowed down my purchases. I'm just in the picking up a few shares here and there phase. Real quick, if you're not subscribed, become one of those 4,200 or so people and drop a like on the video. Helps out the channel in a massive way. Okay, let's get into it. So the fourth biggest shareholder of SoFi, Qatar Investment Authority, sold out 100% of their shares yesterday, June 13th. So that explains the drop in the stock price on June 13th, and then we had continued selling pressure on the back of that negative news June 14th, which is the day I'm recording this video. And the last thing SoFi needs is another piece of negative news around it that's going to move the stock price lower. We've been in a rough spot for a long time now. On a 1-year span, the stock is down a crazy 32%. On a 5-year span, the stock is down 37%. So many investors are getting very frustrated. Qatar Investment Authority has been a shareholder of SoFi since before the SPAC merger, all the way back in 2019 at a roughly $4.6 billion valuation. The valuation before trading today was about $6.8 billion, so it's a little bit lower than that now. So they definitely got a decent gain on those shares, and they actually sold out of about 20% of their shares in 2021 when the stock price was in the 20s. So they definitely got a really nice gain on those $20 shares that they sold at roughly a 5x from their initial investment. So I don't think they're mad about what their gain was on SoFi, but they're obviously moving on for some kind of reason. That reason has not been made public, but they wanted to get out of SoFi completely, which means they're going to lose their position on the board as well. I know we don't put a ton of stock into insider buying and insider selling, but when a massive holder sells out of their position completely, that kind of signifies that they don't really believe in the management team anymore. I personally still believe in the management team, but I gotta say, the fourth biggest shareholder selling out is not a good look for SoFi stock. But on the other hand, I don't think it's the end of the world. They've been in this stock since 2019. Maybe they wanted more decision-making power. Maybe they didn't like other members of the board. Maybe they didn't like that SoFi was focusing on profits rather than focusing on massive growth still. Maybe they didn't like that SoFi was being too conservative. SoFi's been very conservative with their lending and with their outlook to stay very safe and not get too risky. Maybe Qatar Investment Authority thought they should be going full risk on. So it could have been a fundamental disagreement around how to run the business. And in that case, it's probably best that they do sell out if there is some kind of fundamental disagreement. I'm just speculating here, but that would be my guess. QIA doesn't change my investment thesis at all. I don't buy or sell stocks based on what QIA buys or sells. I buy stocks based on my evaluation and analysis of the fundamentals of that company. And with SoFi, I think the fundamentals are in a better spot than ever. Actually, I don't think that. I know that the fundamentals are in a better spot than ever. They've got 2 profitable quarters under their belt. They've guided that full year 24, full year 25, and full year 26 is going to be profitable. And looking out to 2026, the forward PE is only about an 11, and it's probably lower than that since I ran the numbers, since the stock price has actually come down quite a lot. So it might be around a 10 2026 forward PE, which is the same as those big banks like Wells Fargo, Bank of America, JP Morgan. As it relates to the stock price and when the stock price is going to start to move up, I'm going to make an entire video about this, but what we need ASAP for SoFi stock price to start moving in the positive is for rate cuts to be announced, or for the Fed to just start talking about rate cuts. Until rate cuts start to come, SoFi is going to keep their lending very, very tight. They've said that they're turning away 80% of all loan applicants right now. Only 20% of people are getting loans who apply through SoFi. So they've really tightened up those lending requirements to make sure that they're not going to have a massive balloon of defaults. Defaults on loans are what can absolutely crush a bank stock's profitability. SoFi has enacted measures to ensure that no matter what happens with macroeconomic environment, they do not have a massive amount of defaults coming in. Once those rates come down, consumers are a lot more likely to go out there and get loans because they can get them at a lot better rates. And SoFi is going to loosen those lending requirements just a little bit because the rates are a lot lower. We're in a better economic time, a lot looser economic time. So there's going to be more spending out there happening, more borrowing out there happening. That is what we need from SoFi. And it's really not even numbers that are going to come through. Since the market is a forward-looking market, at the first announcement of a rate cut, SoFi is probably going to start a ridiculous leg up. The stock price has been down for so long and it's really due for a pop, but it's so dependent upon the macroeconomic environment and specifically rate cuts coming from the Fed. So we need those talks to intensify ASAP for SoFi stock price to go up. Let me know what you think about this Qatar Investment Authority completely selling out, the fourth biggest shareholder of SoFi, selling 100% of their shares. Do you think this is a big deal and we should really put a lot of stock into this? Or do you think it's just a little piece of negative news that's going to get brushed off over the next few trading days? I want to hear what you have to say about it. Let me know in the comments below. One of my favorite parts of posting here on YouTube is checking out those comments and responding to you guys. Thank you so much for being here. Have an amazing day.